The following figures are available for the annual reports of XYZ. And we need to calculate the price per share according to the Gordon model. Formula P0 is equal to EPS, earnings per share, open bracket, 1 minus B, okay, which is your retention ratio. So B is retention ratio. 1 minus B is your dividend payout ratio. Then we divide this by KE, cost of equity, or capitalization rate, whatever is given in the question, minus G. G in turn has a formula where we multiply B, which is the retention ratio. Okay, we multiply the retention ratio into the return on investment. Okay, so we have P0 is equal to earnings per share. Okay, and earnings per share we need to calculate. We've been given a formula for earnings per share: net profit after tax minus preference dividend upon number of shares. Number of shares that directly given to us, so that makes life easy. There's no preference dividend, so we simply take we have preference shares, so preference shares 12% into 100. Okay, so how much is our net profit after tax? So net profit after tax is 30 lakhs and 12%. Okay, preference dividend is going to be 12% of 100 lakhs. Okay, the formula for that is preference dividend rate into preference share capital. So 12% of 100, which gives me 12. So 30 minus 12 upon number of equity shares, which is 3. So if I solve this further, I'm going to get 18 upon 3, which gives me 6. So 6, then open bracket, 1 minus the retention ratio. Okay, so the retention ratio is not given to me. Directly the dividend payout ratio is given. So I'm just going to multiply it into 25%. Okay, which is the dividend payout ratio upon KE. The cost of capital is given to me directly, 16%, minus the growth rate, which is the retention ratio. Now you need to keep in mind retention ratio is equal to 1 minus dividend payout ratio. Okay, dividend payout ratio. So 1 minus dividend payout ratio, understand if you have a dividend payout ratio of 25%, that means the retention ratio is going to be 75%. Okay, so open bracket, and we have 75% multiplied by the return on investment, which is 20%. And now we can solve further. Okay, convert everything into decimal. So we have 6 into 0.25 upon 0.16 minus 0.75 into 0.2. Okay, and taking that forward, we have 6 into 0.25, which is 1.5. Okay, so we have 1.5 upon 0.16 minus the product of 0.75 and 0.2. So 0.75 and 0.2 gives you 0.15. Okay, so we get 1.5 upon 0.16 minus 0.15, which gives us 1.5 upon 0.01, and this will finally give us 150 as our answer. Okay, so you can do that on the calculator. I'm going to do it once. Okay, we have 1.5 upon 0.01, 150.